Hello, this is the TradeSite Forex Market Preview and International Economic Data Roadmap for the week beginning Sunday, the 2nd of April. Welcome to the second quarter 2017, ending Friday the 7th. Hope you had a great trading week. Here's a look at the dollar index daily chart. We had a good week, and it's because the market actually moved. Dollar was up every day except Friday. Friday was one of the flattest days I've seen in a long time, but everything else was fine. We had some good winners. Not huge winners, but decent enough. And it's a good, clean, technical trading week. So here's a look at the dollar index. Let's go through the major pairs, and then we'll take. By the way, this is the red line's the static trend line, and we used it as support again. We never closed below it and then broke the low of that candle. So we are still using the red line as support, the green line as resistance. Let's go through the major pairs on the daily chart. Euro dollar, very much just the inverse anymore of the dollar index. It's barely worth watching them separately, but here it is. Okay, green line's resistance, just like the other one was support, and that's it. Let's take a look at the rest of the pairs. Pound dollar. So the pound's been trapped in. I mean, it's an 800 pip range. It's not bad, but most of the action's been sideways, except for a couple of up and down moves since. Let's go all the way back to October. And by the way, that's not Brexit. Remember last weekend we talked about the Brexit. That you just slide this thing a little bit back. There's Brexit back in July. Look at it. Then boom. So it's been a little more contained. It hasn't been as exciting, but it is what it is. Aussie dollar, 600 pip range for 8 months. The majority of that ignores the bottom 300 pips or so. So it's almost like a 300 pip range for most of 8 months. That's pretty boring. There's just not a lot of change up in the currency settings of the world right now. That's the big key. Pound yen. Look at this just drift and how boring and narrow that is. The euro yen. Not much. Now, it had the 13 sell signal back in January. That we've been down ever since then. It is what it is. And then the New Zealand dollar pair. Yeah, okay. So let's take a look at the intra-week action. Let's get a look at what happened during the week. So the euro dollar high to low for the week was 300 pips, which is good. Friday, look how boring Friday was. I mean, literally, we were in a 25 pip range for almost all of Friday. Excuse me. So that's about as unexciting as it gets. It's pretty hard to make money in a 25 pip range, and we had two calls there. Neither one of them triggered. Here's a look at the pound dollar. High to low there is 240 pips. A little less than the euro, which is strange. Usually the pound's bigger. But we had some great winners in the pound this week. Aussie dollar, high to low is only not even 100 pips a week. That's not tradable. Pound yen, 250 pips, but it was basically in two moves, euro yen. Look at that late in the week, late in the action. And the New Zealand dollar pair, high to low there is, 100 pips. So we really don't have tradable action in the Aussie and the New Zealand. Euro had some, pound had some. Like I said, it was still a fine week for us, but nothing. I wouldn't point to any specific technical. Say, here's something you need to look at right now. Let's go through the data for the next week. Starting on Sunday, AIG Manufacturing Index out of Australia, Tankan Manufacturing and Non-Manufacturing Indices, that's the plural of index, you don't know. Japan, bank holiday for China to start the week. Final manufacturing PMI out of Japan, MI inflation gauge out of Australia, retail sales building approvals out of Australia, commodity prices out of Australia. Boy, Australia is just dumping the data to start the week. Retail sales out of Switzerland, Spanish manufacturing PMI out of Europe, Swiss manufacturing PMI, Italian, French, German, and the broad European final manufacturing PMI. All of them coming out to start the week here. Monday, Italian unemployment rate, UK manufacturing PMI. Did I not throw that in? By the way, those UK numbers, they don't matter yet, but the Brexit stuff is actually just starting to happen, right? Brexit has occurred. So at a certain point in time, at some point down the road, these UK numbers are going to mean something because they're going to be much more separated out from the EU. You got Europe's or the EU's PPI unemployment rate, Canada's manufacturing PMI, same with the U.S., and then the U.S. construction spending, ISM manufacturing, Canada's business outlook survey. We got a Fed member speaking, total vehicle sales here in the U.S. This is all to start the week, and none of it's big. New Zealand dollar business confidence, dollar yen, or the Japanese monetary base. China stays on bank holiday. Australia keeps going at it with the trade balance, Japan 10-year bond auction, and then we get a rate announcement out of Australia. So Australia filling up the data to start the week here, just to get into early wee hours of Tuesday morning, New York time. Bank of Japan core CPI, Spanish unemployment, construction PMI, retail sales out of Europe. Here we go. U.S. trade balance. That's on Tuesday. That's one of our big three each month, along with it's at the same time as Canada's trade balance. Not as big of a deal, but it's an important one. Nevertheless, factory orders here in the U.S. tip economic optimism. We got the GDT price index. Fed member Torillo speaking. We got the BRC shop price index, AIG services index. I got the New Zealand commodity prices. Now we're into Wednesday. Spanish services PMI, Italian services PMI, French, German, all of the PMIs out of Europe, individual countries, and more, along with the UK. U.S. Not the ADP non-farm employment change number, final services PMI, ISM non-manufacturing PMI, the weekly crude oil inventories on Wednesday. The minutes from the last Fed meeting come out. We jump to going into Thursday, consumer confidence out of Japan, German factory orders, Swiss CPI, retail PMI out of Europe, Spanish 10-year bond auction, French 10-year bond auction. We got the monetary policy meeting account from Europe, challenger job cuts here in the U.S., building permits in Canada, unemployment claims and natty gas. Those are the weekly numbers here in the U.S. AIG construction index out of Australia. Going into Friday, leading indicators out of Japan, unemployment rate out of Switzerland, German, French, industrial production and trade balance numbers, foreign currency reserves out of Switzerland, Halifax HPI out of the UK, Italian retail sales, trade balance out of the UK, manufacturing production, construction output, and industrial production all out of the UK, and unemployment rate out of Canada and out of the US, another one of our big three. So we've got two of those this week. Trade balance on Tuesday and this here will be half size ahead of each of those. We got the IV PMI number out of Canada, wholesale inventories, consumer credit. So what do we look at for this week? New quarter. For money managers, it's a new time to start trying to make money and move the market around, as opposed to Friday, which could have been expected to be late. They've already done their job for the quarter, the first quarter. New month. We're into April. It's traditionally a decent time of year for trading in all things. We'll see what happens. I wouldn't say currencies have been super excited, but we've been done okay in Forex here recently. And then we do have key data on Tuesday and Friday, so we'll be half size ahead of that. Charts as usual. I'm sorry. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for about 2 weeks-ish. If you beg, maybe 3 or 4 days beyond that. Have a great trading week.